All right. Just kind of want to do a little breakdown on the day, how I traded, um, how it went. Uh, yeah. So 52 winning trades, 61 total trades. So, whatever that is, that's a 80, some 85% win rate, something like that. 80% win rate. My losses were really contained. You can see here that, I had a 96 down to 17. That was an $80 loss on this guy. Tiny loss here, tiny loss here. This guy, how big was he? 422. Yeah, $50. Little loss right there. So, I had 10, 9 losing contracts. This was 2, 3, 4, 5, 6, 7. Maybe this was 8. Maybe this was 9. I don't know, whatever. Pretty small losses, right? So what I want to do is I kind of want to do a little breakdown of my system and then do a breakdown of how I traded today and how I read the market. And then also kind of say that the reason why I'm making this video is because how I trade is pretty wild. I mean, I'm a really busy trader. I know a lot of traders swing for those $1,500 wins. I'm swinging for $15 wins, and I'm putting a lot of them on, right? So this is 61 trades over the course of 90 minutes. So I guess that means I'm averaging one trade every minute, 20 seconds or so. And my average hold time is not very long. But each trade that I put on, I'm risking about, I don't know, probably about $100. And then sometimes it might get up to like $220, somewhere in there. And I hit 1-to-1 risk reward probably. It's hard to say because, it's hard to say. It's hard to say because I'm such a busy trader. But let's do just a quick little recap of kind of the trades that I had taken today. And I'm just gonna kind of like fly through some of these and then we're gonna break down, look at them a little bit closer. But I just kind of want to do a little like autopsy of the day. Long, and to give you an idea, like this long right here, I took from 16 to 24. So this is a $15 winner right here. That's a $15 winner. So these are 20, $30 here. This was a big drawdown, so I lost like $40 on both of these. I got this nice long. You can see how I'm scalping in and out up here at the top. A lot of small trades. Took a $30 hit there. Took a little short right there. Took a long. Took another like $30 hit right there. Finally caught the bottom. Did a really decent job of ripping that up. Bam, bam, bam. This is a little break even. We'll talk about what that was in a second. I did this, and then this was then in my trading day. So this was about an hour and a half worth of trades. Of that time, it was during this portion right here that I actually traded my I think it was here. Let me deposit. Yeah, so it was during this time right here I was actually trading my a Top Step account. So here's a Top Step account. So I put up 317 on that. I have a combine that I'm doing here. This gives you an idea of, how many trades I put on. I took one loser for $1.50, a couple of for 650. They just ripped it on the other one. Really decent trades on the other one. This one was a little bit sized up though. Kind of got aggressive on that, but traded that in this little mess down here. During this time I was going long here, caught that, and caught the final end of this, got hit. This was really good, and we'll break down why I saw that long here in a second. But we're gonna look at different charts that don't have my trade map on it here in a second, and I'm gonna kind of like break down what I was doing. So, somebody might be looking at these little dinky trades up here, right? Be like, what the fuck is this? But what I was doing up here was I was targeting 900 all day long. And we actually blew through 900. We made it almost up to 29,000. But I was targeting 900 all day. And but the thing was we were $600 off the lows, the overnight lows at this point. So, and I'm buying the top. So I'm putting on one or two contracts, taking off quickly to lock in, 20, $40, and then trying to catch a runner. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, right? And then I finally got a hit. But in this period at the top, buying it from, 9:55 until 10:06, from 9:55 till 10:06, that's right here. I'm at 225, 10:06. Let's go down over here. I made $60. Might not seem like a lot of money, but that was super, super mitigated risk. And with a 85% win rate, I feel like I'm able to buy the top of a market like I was, and so I wasn't on the fade train. I was looking for longs through all that. So that's this is a really, really common way that I trade. Is I'm surprised I wasn't even more busy in this region. Here it is again. I buy two here, I take one off, and then before I took this one off, I actually added two here. So when we look at this move off this low, I caught with at least one contract basically everything from here to up here, except for this little period, this little space from 85 down to 81. So 4 points of this I wasn't able to ride, but got that. But I did lose this 15 points right here. Basically got all that back on this trade. I think that was the only short I had all day long. Here we are again. This is super busy, and this is, I remember exactly why I took this trade, because, we came down, this, we can investigate it in a little bit, but we came down, we bounced off this level. I was getting long. We're bouncing up and we're coming into this volume here. We're putting in these 3 candle reversals. So that's why I got out of that. Then we bounced through it and we caught support. So I got my longs, a couple of little hits here, but not before I got at least two of these longs off. So I got 2 of these longs off here, took the hit, whatever. This is how I trade. It's buy, sell, took it. This was interesting why I got out. I went to break even. I just didn't like the vibe. And then, there's this. But the reason why I stopped trading at this point is because I don't want to trade after 11 o'clock. I want to only trade from once the initial balance is formed, so at 9:30 Central Time. And then I only want to trade for an hour and a half, because that's when my mental capital is, still sharp. I saw this pop right here. I was like, oh, there's a couple trades left to be had. And so I took these up, put these on, and so how did we do on this last little bit here? Let's look. So let's go back to 11:04 on the P&L. Right about there, right? So 620, $30. $30. I'll take it. I'll fucking take $30. And that's what that loss in there, right? And that loss is 14. That's a $30 loss. So that could have been $60 if I would have just, if I just wouldn't have sold, for another 10 seconds, they probably would have been able to get back to break even. But it's all good. Got out. This is how I trade. But now let's look at the setups and what I was looking at today. So my bread and butter, probably the chart that I rely on most, is this 125,000 volumetric chart, and I got a 15,000 volumetric chart that also shows delta divergence on it. It doesn't total the delta divergence, and I'm not sure if I want to do that or not. I think what I want to do is have like large size trades on here. Let's see if I can put that on. All right, so I just put a large trade indicator. Oh, this is going to be really interesting to see. This actually might come in really useful on this chart. Ooh, this could be really cool, actually. Let's see here. All right, fuck it. This is not about this right now. I'm gonna do a little bit of research in that. Let's just talk about what the trade setups are. So, first trade this morning was at around 9:35, right? So let's come in. Let's look and see where that is. Here's this, right? So this is what we're looking at. This footprint started printing at 9:36. I think my first trade was at 9:38, or it was right around this time. So what are we looking at? What would make me want to keep being long at this point? Is that part of me thinks I traded before the. Let's go back before we hit the overnight. Yeah, here we are. Yeah. All right. So yeah, 34 was my first trade. It was at 34. There we go. Yeah, because I remember breaking through the overnight high. Whatever. Right. So what I'm looking at is essentially this. I'm looking at where volume is getting accepted and what volume looks like. I really like these raggedy ass expansion candles, right? Like here we have this really, really nice bell curve. Sure, we have a little bit of a volume build at the bottom of it. And that volume build is actually pretty interesting, but we'll get into something similar in a second. So we had this area right here, which is a heart of our distribution, and this is right after the open. And the next 125 footprint goes in, 125K footprint, and we end up having a acceptance of that price, and we explore higher. And as we explore higher, we have areas of volume going in. Now, I don't trade this time because it's too volatile for my setup, because I only allow a max loss of 25 points per contract. And when the ATRs are too high, it's just nothing but can works for me, right? Then we have another distribution going in here. You can see that like the market's like slowing down a little bit because this distribution is just a little bit more like smooth. And then one of the key things that I would have looked at when I was coming in the market was the wicks, right? The outer areas of distribution. So, whatever it is, 85% of the buying took place here, but then you're looking at this wick. And on the beginning of this next candle, while this was printing, we started building in volume acceptance in this area. And there was a sell-off that came down into this volume patch, and then it was failing. So it was in this zone that would have been looking for longs. So when we come back here, we look at this, and we see right here, we see this volume right here, and we're starting to print this zone right here. This is acceptance. This is acceptance. This is acceptance. It's just we keep seeing the heart of these distributions migrating higher. So I'm looking at low volume nodes and places where I can either get in or put a stop. And so we right here was probably my first trade. So we probably shot up, came down, we retested this volume. That would have been a long. I took a couple of longs. Then as we take out the overnight high, we're starting to put acceptance in above it. You're starting to see the volume getting accepted above it. This whole area here is an acceptance of volume. And so we're tentatively looking for longs. And this is tough because I have a chart that I do every morning, and I try to look at it over and over again throughout the day, is a 1 hour chart, and I mark it up, right? So like I was thinking that this 28,100, 28,200 would have been the line in the sand. This here was the wick from the FOMC. Then you see this as the volume build that was hard to break through. I had this area as a resistance area, and the top of this was actually, this was crazy. This wick hit my level to the fucking nuts and rejected. I've been looking for this area to resist, which it did again last night, and we sold off. And then the first 1 hour candle low of 310 all the way up to 680 for whatever that is, 370 points. And so my first trades are up here, right? So my first trades are literally, we're coming up on this 720 line, right? Like, this is where I'm entering the market. So right fucking here, this blue line. So that is why I'm so tight with my stops going into this, right? I'm so tight because we're so extended. And I can't allow myself to look for shorts yet, but I'm looking to see where the volume's building. So volume above the overnight high right here, this yellow line. Then we push up and we put up a bunch of volume up yonder. We put up a bunch of volume up here, and this volume kind of fails for a little bit. And now we have a double distribution, right? We have the breakout volume and then another push higher, and then we have volume, and then price started falling. So the narrative at 10 o'clock, the narrative in the zone, how I'm trading, is informed by how will price react to this high volume here or this high volume here. And then we have this level on top of it. So, and then we have the overnight high on top of that. So we're looking at how price is going to relate to all of these levels. And when price comes down into a high volume level like this, I'm looking to see, do the bears fail down here? Does this support? What does that look like? And when is it okay to go long? And when we look at what happened in that zone, and this is the why was I looking for long continuation? This is this question here, because this was really key. This is a key part of my system. Is we came down essentially into the point of control of this volume block, and price failed it down there. So when we look at the 500 tick in that zone, we came down to that level, made a serious push off of that key that key point of control from over here, and I snatched it. And then, probably a really big fucking long right here. This could have probably been a massive, massive long to load into. But like I said, I don't know. We're up 600 points or whatever it was off the lows of 300, 400, 500 points, whatever it was off the lows. And we failed. We're putting in 3 candle reversals. I'm not marrying this thing, right? I'm not marrying it. Instead, I'm going to try to just, and when you look at this, from this bottom to this high, I was long for all but 2 points of it here, and then 55, down to 47 points. So all of 9, I was long through this for all but 9 points. And that's a 65 point run. Just granted, I took a loss in there, but these two winners take care of these two losers, and I still smoked that area. So whatever. It was a good trade. And yeah, I mean, this might sound like I'm kind of tooting my horn and being like, oh, wasn't this a great trade? But this was a fucking great trade. And I can make great trades. And that's the psychological part, is believing that if I follow a system, I can do good trades. I just got to remember to follow my system and not tilt. And at no point today did I tilt. So when we bring up these two charts once again, we're seeing this distribution being formed, right? Huge volume. We could even argue it was all of this. So let's go, like, if we're to zoom out and then do something like this, something like this, something like this. Here we go. Come on, print it. Here we go. This is this volume that we're looking at, right? This is what's up. And so now it's at this point that we're kind of looking for this high volume node to support, or to see like reactions in this low volume node here and see price reject. Okay, come on now. Okay, no, sorry, didn't work. All right, so that was probably a lot. And there's probably some question marks on what I just said, but whatever. And then we see essentially a poor high here, right? So the auction didn't complete to the upside, auction didn't complete to the upside, auction didn't complete to the upside. And then we have a volume build here. And that's telling me that prices are getting accepted higher. Yeah. And so what we're looking at here was, this is where I moved a break to my stops to break even. No. Fuck it, we won't get into that. But yeah, we're just looking for it. We're looking for the trend of the market. We're looking for where volume is getting accepted at any time. In my mind, anytime you get a proper distribution like this, a bell curve, another bell curve, basically another bell curve, another bell curve. This is really important information to take into. This is really important information to take into account for like what the bias is, especially if you have a 125,000 volumetric chart showing you a decent distribution, and then you have like balance toward the top of it. That's a pretty bullish sign for me. Here's volume getting accepted up here. Now let's see this rep, because it was at this time that I was already done, right? I took that long. I think I was done by like 11:11 or something like that. So it would have been on this candle that I was done. I locked myself out. Acceptance of volume, acceptance. Here's this lower acceptance of price. But notice that we're still like being supported by this, right? We're still being supported by all of this volume right here. Getting accepted. And then when we zoom in a little bit more on this volume metric, what we're seeing, and this is really key, is we're seeing tapers down here. So when we start seeing these tapers down here, what I'm always looking for is this, is I'm always looking for in order for me to switch my bias short, I would be looking for a volume build inside of these tapers, right? Here's a taper on the 125, right? But like, you would have to see a volume build here. You would have to see something happen here where you're like, the bears ran out of gas, and you can see it on the taper, the bulls snatched it back up. You can see it on the taper. Price didn't get down there. Price then did get down there, and you saw this massive shot right here of the bears trying to push it lower, but they weren't able to. They didn't take out another low. This is all telling me that this is safe. But if you suddenly had kind of like a volume build that looked like this, except it was down here, that would tell me that you got to start being careful, and there's going to be a move down. So it's not that I'm ignoring these lows, but really I'm trying not to put too much weight on them until they're forming in the tapers. And then we have this build, and this almost looks like it was a news push. I don't know because I wasn't watching, but like this is crazy. This is a huge impetus. I'm gonna go look at the news to see if something came out around noon. Yeah, I don't know. My news feed seems kind of glitchy, but we blew out. I mean, all day long. I kept trying to target this 900 level. Kept putting my stops up there. It was a low volume node on the 25-day rolling. On my chart, I always have the 1 day, the 5 day, and then like the 25-day rolling with their respective POCs. And I kept trying to get up there. I kept trying to get up to that 900 today, but I was never able to ride one all the way up. But yeah, so today for me, when I look at my P&L, after commissions, I made almost $600. I traded about 90 minutes, put on a shit ton of trades. But for me, the silver lining of how I traded today, and the reason why I think that this has edge, is that I put up $600 in 90 minutes buying the top and jockeying at the top. And I wasn't looking for a short up there. My bias was strong to the long side, and I didn't see anything today except for a brief moment. There was a brief moment where I took that short. There's that brief moment where I took that short at 10:07, and took a short, yeah, somewhere in this candle right here. I just made a little money on it, whatever. I spent a little money on it. It wasn't the worst call, right? When you look at it, it's not the worst fucking call going short, right? Somewhere in here. Let's see where was the actual price I went short at? 76. Right here. This is where I was short. I only made a couple bucks, but, looking at the day overall and only putting one short on, that's not the worst fucking place to do it, man. That's the worst place to do it. We didn't take this high out for another hour, for another 15 minutes. I caught that. I caught a little short right there. Yeah, I got caught on a long just previous to that, but this was my short changeover. That's kind of an introduction to my system, and I want to understand how other people see bias and how they set up their bias and what their theory is for their bias and how they trade when they are in trades with their bias versus against their bias, how they classify their fades, how they risk manage their fades, how they risk manage their trading with their biases when your window's at your back. As you can see, how I trade is I have like an always in mentality, right? Like I'm fucking nearly almost in. Look at this. Let's check this out. So I traded for about 90 minutes today. How much time was I not in a position? Right here is 5 minutes. Here's another 4 minutes. So now we got 9 minutes. This right here, let's call it a minute, 10 minutes. This right here, 2 minutes. So we're up to 12. This right here, 16. This right here, I was training my top stop. And I think I was basically done with my top stop, like right around here. So let's just say 20 minutes. Here's probably another minute. Yeah, another minute, 21, 22, 23, 24. So whatever. Out of the 90 minutes I was trading, I was probably in a position for 60 minutes of it. Yeah. Trade like a fucking flea on meth. But that's how I trade. I'd love to hear more about how other people are using volume profile to inform their trades, how you're setting up your biases, whatever. And yeah, I'd like to learn more about how other people are setting up their trades. I also think that like one of the things to keep in mind is that like when viewing how I trade, you know, let's say I put on a position of 3, you know, like in here, 1, 2, 3, I have 3 on, I've got a 25 point stop on each. So that's, in theory, that's $150, $150 in risk. But when you look at how I'm trading this, you got 83, 85. So I made $6 on one. That might sound ridiculous. $6. I made like another like $8 on another. That's like $15 plus another one up here, 86 to maybe that's another like $25. But I put up another like $15, and now we're up 40. Put up another one, and so like when I look at these trades and these setups, and when I consider that I have $150 in risk, I don't think to myself I have $150 in risk on this position. I say to myself I have $150 in risk on the flat to flat position, and the flat to flat position takes us from right here to right here. And I know from doing my studies earlier that this was a break even. These 3 positions right here were break even. So really it's only this. So when we look at this from 1045 to like 1056, we're at 522, 1056. So I put up $100. So I was able to put up $100 during that time, essentially. That's what I did. So I flat to flat, I risked 100 or 150. I made 100. And that's kind of typical for me. But when I add it and get up to 3 and bringing my stop up, so I'm not risking as much. I mean, there's all sorts of like constant management. I'm going to stop this video here. If anybody watches this and they think it's interesting and they want to learn more, hit me up.